Let's head to business news now with Emma Hatton, who's in our Wellington studio. Emma, so there's more earnings reports. Hit us with the good ones.
Yeah, let's start with the good. So A2 Milk, so this is a local stock market heavyweight, of course the specialty dairy company, they recorded a record full year profit of $386 million and its revenue actually rose by a third to a whopping $1.73 billion. And infant formula sales, which is its major product, made up the lion's share of that. 80% of that was from infant formula sales. And that was primarily due to a really strong demand because of the pandemic, particularly from its China and Australia markets. And this was actually something that we saw creep up quite frequently throughout all this when we're talking to various companies and the demands they were seeing, is that demand from offshore markets for New Zealand products was really strong because of the way that New Zealand had responded to the pandemic. Obviously our strong lockdown restrictions made international headlines and we got on top of things quite quickly, and we had such a long time before a new case came in. We were seen as a really responsible and, a safe place to get food from because we took these health precautions really, really seriously. So that was reflected in what we saw with A2 Milk. And they sort of capitalised on that. They spent a record amount on marketing, just that really trusted brand, that reputational factor really, really coming into play. And obviously it really paid off for them because they had a whopper there. Another good one, well, I don't know if it's good, but it was in this environment, breaking even is actually pretty good here, particularly for retail, which is what this one is. And this is the Halenstein's Glassons Group. So obviously, despite being retail, where they had to shut a number of their stores across New Zealand and Australia for quite a period of time, their sales were actually slightly up on last year. And it's yet to, formally lay out its results, but it sent out some guidance earlier in the day today. And it expects its profit to be only slightly down on last year, about 5%, so more or less even there. And what saved it was its online sales. They went gangbusters, basically. In the second half of the year, they were up 80% on the same time last year. So the company, it was pretty agile. It already had its e-commerce platforms and its payment systems and its distribution stores already set up. They already did online. So they took any opportunity they could to sell, even in level 4 in New Zealand, they were selling some essential items like, winter coats and things like that. So that really paid off for them. That they're expecting to report a really good result when that comes through. And their share price, that was really reflected in it. It went way up, 24.5% at one point, and I think it's closed up 20%. So, yeah, really good result for them as well.
Okay, well, let's move on to the ones who may not be as happy. Fletcher Building.
That's right. So we knew this was coming. They signalled last week in some guidance that they were going to make a loss, and that was confirmed today. Loss of $196 million, and that's compared to a profit last year of $164 million. So massive turnaround in fortunes there, and that was pretty much all because of the pandemic. Their revenue took a hit. Projects, of course, were put on hold, so massive costs there. And then in all of this as well, they foresaw that the pipeline of work that they'd be able to get after the restrictions were lifted would be a lot less than they previously thought. And so they moved very quickly to downsize their business. They did that big restructure, which was in the news not long ago. 1,500 staff made redundant across New Zealand and Australia. Plus some other one-off costs, closed some unprofitable product lines and some manufacturing facilities. That cost it $276 million in the year just gone. Obviously, it's going to be good for them in the long run because that's a cost that they've just had to weather as a one-off now. But nevertheless, this is when it's hit it. But it's optimistic that, it's done the right things now to preserve it for the future. It's got a good pipeline of new work coming through, high-quality work that's low risk and with quite good margins on it. So it's got a $2.4 billion sort of forward order book there, which it's very happy about. Not so optimistic as to pay its shareholders a dividend today, though.
Emma, can we quickly touch on ANZ Bank too?
Yeah, absolutely. They're definitely worth mentioning. So we had their third quarter results come through today, and they also show a bit of a hit from the pandemic. I mean, they still made $351 million in the 3 months to June, but that was down on the previous quarter by about $40 million. They're also gearing up for more bad debts. So this is customers who default on their loans and can't make their repayments, so the money they were banking on through that, gearing up for some of those loans to fail. They've put aside an extra $79 million for those, and that's on top of about $230 million they put aside in the first half of the year. So they're foreseeing that that's going to be potentially something that really knocks them later on if they start to show through in any sort of magnitude. So it's not terrible, bad, awful news, but it is just another sign that the pandemic is making its mark on some of these really, really big companies. It also showed in these third quarter results, interestingly, they've issued $7.4 billion worth of new lending to customers and businesses. They have, of course, been urged repeatedly by the Reserve Bank to be courageous with their lending and keep lending. And they are, but they are saying we're making sure we're only lending to people who we know can pay it back.
Right, so how was the market feeling today?
Yeah, market actually closed down a touch, 0.8%. It's going to start tomorrow at 11,751 points. New Zealand dollar is currently trading at 66 US cents, 91 Australian and 49.9 pence.
Thanks, Emma. That's Emma Hatton with our business news joining us from our Wellington studio there.